Hello everyone, how you guys doing today? Sorry for my late guys. A few things, quite a busy day I would say, so I had to do a few things in the morning. I've then couldn't do in the morning and then I had to do in the afternoon. So it was quite of a rush here, especially with this weather. Hopefully everyone is having a good day. I do want to get right into the content because we don't have much time, so it's going to be much quicker. As I say, you know, I'm leaving the company, so from now on the webinars will be shorter and shorter as I'm planning. I'm doing other stuff. So let me share my screen. Today's Wednesday. As usual, we have the sentiment data. All right, so we have the sentiment data today. You know, how to master market sentiment data for low risks and high reward setup. We're going to be basically looking at Aussie dollar, pound dollar, and euro dollar. Okay. Tonight we also have the PPI. You guys need to pay attention on that because most likely we will have some sort of interesting releases in a sense. But for now, what really is the most important is still the NFP from last Friday. Okay, so without any wait, let's get to FinLogic Sentiment Tool. So FinLogic Sentiment Tool is powered by FinLogics. It is a sister company from ACY. And basically what they do is they get all the data, right? So they make things easier for us traders. And this tool is called market sentiment. Okay, so we got for Forex, commodities, and also indices. For the webinar, we will be only using the Forex ones. Okay, so quite easy actually to use. It's pretty straightforward. It gets updated every 15 minutes. So the last updated was at 4:30 p.m. here in Sydney. And it's very intuitive. So if you look at colors, red is sell, green is buy. So what we want to do is we want to be into the trade that has the minority. So for instance, I've separated three pairs. So Aussie dollar being the first one. And Aussie dollar, we can see right here that the majority is short and the minority is long. So what we want to do is exactly long this pair. So if we go into the chart at the moment, we can see that Aussie dollar will be going up. Okay, and it has been going up for quite a while. But if we look at the moment, there's a few things here we can clearly see right now. And the first one is it is right at a resistance area. Okay. If it's right on a resistance area, I don't want to long into a resistance area. I would be looking to short if I was going to do anything in a sense. Now, for me, that is not a problem because what I can do is I can basically wait for a market pullback. But now if we look even closer, we can clearly see we are on a ranging situation here. Okay, we are on a ranging situation. Now, if we get a pullback to somewhere around these levels here, would be fantastically good for me to be looking to long that. My main target is at 68 cents. By end of year, okay, by EOI. So by end of the year, I'm expecting the Aussie dollar to reach 68 cents. I'm not looking that to be reached in 2 weeks, but in the next 4 months, okay. Oh wow, I had my heart started to go crazy at the moment because I saw the date and it's like 10 September. But then I just looked at the 10 because I was talking about the month. I just want to know if I was correct in the 4 months, right? Ended up to 3 months. It's not 4 anymore. But anyways, counting with this one is 4. And then I looked at 10. I was like, oh my God, it's already November. It's already October. But it's not. Anyways, So most likely what we can wait is for a pullback somewhere around 65,630, 65,63, and then a continuation up to 67. Oh, wait a minute. 66, 65, 66,500. Sorry. 66,500. Okay. So my target would mainly be at 66,500. At least for now. Maybe, if the market actually pulls back down to 65,630, then that would be quite good. Otherwise, I wouldn't be looking to long exactly where the market is at the moment. I would rather wait for somewhere like this than to long the market where it is sitting at the moment. Okay. So that's the first trade, long Aussie against the US dollar, in my opinion. It's a pretty good trade, especially because the US dollar is weak, and we can probably see the US dollar weakening even further, okay, in a sense, in the short term. As I say, we're going to have the PPI tonight, the producer price index for US, but I do see an option of, even if that comes a little bit higher, the market is such priced in for 3 cuts this year, by end of this year, that most likely we will continue to see a depreciation of the US dollar. Okay, so I wouldn't be scared to see US dollar reaching even below 97 by end of this year. We're talking maybe about 96, but my target is still at 97, but once we get there, I'm probably going to see, but maybe 96 even, okay? As gold continue to rally per normal, NVIDIA as well, continue to rally. So I think I've mentioned 200 as target by NVIDIA, but anyways, it was quite an interesting one. Also, the S&P 500 continued to rally. I bought some S&P 500, so that's good. And I bought some ASX 200 as well. So I've bought somewhere around this price here. So hopefully now would be a good price to buy back. Let me just go for the daily. Yeah, somewhere around here would be pretty awesome to long it again. Indices are always good, always good. But anyways, cool. So long Aussie against the US dollar. Main target 68 cents by end of the year, but first target, where it is, but first target would be at 66,500. Okay. Cool. That being said, that's good. Now moving on. Next one is the pound against the US dollar. As we can see, very similar setup. We have the majority the majority short and the minority long. So looking at these, most likely I would go for long positions. Okay, so if we go here at GBP/USD, perfect. If we go here at GBP/USD, we can clearly see the 37,200 as my main target. I've mentioned already hundreds of times. But again, we're very similar setup to Aussie dollar. We're very on the top of this consolidation. Now, if we get a pullback somewhere around these levels, exactly where we are, it's good for me. So I would rather wait a little bit more if we can catch an entry somewhere around these levels here. Stop losses just below these lows, and then my take profit would be down at 37,200. Would be amazingly good. Okay, not a big pullback, but still better than nothing. Somewhere around here. Stop losses would be below these 2 lows here, just for precaution, and then up at 1.37,200. Okay. And then the last one is the euro dollar. I've mentioned that quite a couple of times. And yesterday, I've mentioned as well about euro dollar up, and I've told everyone that my position would be triggered by end of this week. And as I've mentioned, it's right here. Now you have two options. You can either wait and close 50% at 118,700, or you can just wait to 120. Now, where it is at the moment is pretty good. We can see it right here. It's pretty good. Okay. So it's something that I'm looking to expect that move to happen very soon. Not too sure when, but most likely end of this month, because tomorrow we're going to have the ECB interest rates decision, and that's going to be pretty classic move. So I'm already seeing that euro dollar going probably down. Maybe this position gets stopped out down to 1.16, back to 1.16, depending on what Lagarde's have to say. It's going to be the first meeting after the the Jackson Hole Symposium event. So she may have some different ideas in a sense that can lead to a depreciation on the euro. But, the US dollar is still very bad. So in a sense, I do believe that euro dollar can possibly climb up to 1.18700 in a very soon manner. All right. Well, just going over a few things again. So Aussie dollar long, I'm looking to a pullback to 65,630. Enter the position there. Stop losses below these two lows. Take profit at 66,500. Then GBP USD. Waiting for a small pullback. If you feel comfortable entering now, it's up to you. But small pullback to 1.35, 150, and then take profit at 1.37, 200. And then now by end, the euro dollar, my position's already in, but if you want, you can place your position right here. It's a better risk reward, gives you a better risk reward, 0.5%, 0.6% more. It's completely up to you. Or if you want to wait for the market to come back to 1.16, that's good as well, because it looks like we're formatting somewhere of a break of structure here down to 1.16. Okay. Well, as I say, it's going to be quick. So we come to an end. Tomorrow we'll be back. But yeah, hopefully you guys can catch some good trades by end of the month. Thank you so much, everyone. Have a great day and rest of your week. I'll be back tomorrow, and we go from there. Cheers, guys. Bye-bye.